Although this is not part of the course for reconciling a bank account that's imbalanced, just because the bank is balanced doesn't mean you don't have a problem with the bank. Now again, these are processes that form part of the expert software systems checklist that we use when we have work offshored. However, it's certainly a tool that you can use when doing accounts in a general sense. Why can a bank rec still be wrong even though it's balanced? Apart from errors in the actual coding, which just happen to, by coincidence, offset each other, it's pretty rare, there are two main reasons for this. The first is a thing known as stale checks. Now these are easy to spot and they're not normally a problem. Stale checks, by the way, are defined, and there is a Checks Act 1986 which governs checks and the handling of checks in Australia. And effectively a stale check is, as you probably think, and correctly so, is just a check that's gone stale. What does it really mean? From the point of view of the accounts, it means that you have an outstanding check. In this case here we've got a 15 September 11 check, but that check may in fact be really old. Imagine if that said the 15th of October 2010 and we were doing a 39/11 bank rec. Now if you leave that check in there as outstanding, your bank's always going to balance, but your bank is wrong. And the reason is you've got a payment that is never going to present. So as part of any quality reconciliation process, you should really be looking for outstanding checks that are stale. The second area that you can have a problem with is that you've got to recognise that if a check or a deposit is outstanding, there is no reconciling procedure to check that it's wrong until you do the next bank reconciliation. So again, let's explain this on an extreme point. Here we have a outstanding deposit of $5,500 for consultancy fees. Now let's just say that was actually $15,500, but it had been put through incorrectly in the accounting file. Your bank rec's not going to pick that up, because what's going to happen is the bank is not showing that deposit because it hasn't been deposited yet, and your bank statement therefore isn't going to show it. Your accounts show it. You certainly have the incorrect amount in your accounting file, but then it adds it back anyway when you check the bank, so therefore the reconciliation's not finding it. The bank will still balance. All you're doing is getting an incorrect entry and adding it back to the bank to force it to balance again. Now, it shouldn't be a big problem, but you'd be surprised sometimes when doing accounts, and it again is a function of your precision in accounting, at what level you're at, the organisation you work for, the accountancy practice or the bookkeeping firm. Certainly when we're doing offshoring type work, it is essential that accuracy is maintained at a very high level. And these sort of things are looked for and reviewed as part of a standard check-off of things that should occur when finalising a bank reconciliation.